Hello everyone. Today we are going to discuss about the chapter of assessment of companies, which is in the subject of business taxation for final year BCom students. So this is the very most important chapter in the subject business taxation because you'll be getting two 14 marks questions as well as two 6 marks questions in the examination. We have a lot of concepts under this chapter. Okay, one of the important topic in this chapter is depreciation. So let us move forward on this. Depreciation under section 32 as per Income Tax Act 1961. So let us start with the meaning. Depreciation refers to a gradual, permanent, continuous fall in the book value of the fixed assets due to the constant use of the asset. So we have all know that depreciation refers to there will be a gradual decrease in the amount of value which is on the fixed assets due to its constant use over the period of time. So people or assessees can claim the deduction of depreciation only for accounting or for the purpose of taxation. As per Income Tax Act of 1961 allows the depreciation of tangible assets and intangible assets. In the cases of tangible assets, an assessee can claim the deduction against building, plant and machinery. In the case of intangible assets, an assessee can claim a deduction against the patents, trademarks, copyrights, license, franchise, or any other commercial rights. If an assessee want to claim deduction under section 32, he need to satisfy certain conditions. That is, assets should be owned by the assessee. That means the owner of that particular fixed asset should be the assessee himself. Secondly, the assets should be used for the purpose only for business or for the purpose of profession. And the third one, assets should be used in the previous year. That is, that particular asset should be used in the previous year 2018-19. And we know that depreciation will have a lot of methods of calculation, as we know that straight line method, reducing balance method, annuity method. So here in income tax, while calculating depreciation, that Income Tax Act suggests only to follow written down value method, because the written down value method is the best way to calculate the depreciation of the asset, because the depreciation amount goes on decreasing with the time. And the Income Tax Act 1961 says that depreciation should be computed at the prescribed percentage on the WDV of the asset, which in turn is calculated with reference to the actual cost of the asset. That is the reason while calculating depreciation under income tax or business taxation, we used to calculate under WDV method, that is written down value method. This method also have a name of reducing balance method. Now let us see the format of the depreciation, which is under section 32, that is computation of written down value at the end of the year. So as we know, our previous year is 2018-19. So during this year we are going to find out the written down value, which is that is the end of the year, which is on 31/3/2019. So in starting, we are going to start with the WDV at the beginning of the year. That means whatever the assets return down value amount which is on the beginning of the year, that is on the day which is 1/4/2018. On that day, whatever the assets opening value will be there, that will be considered here. Next, we are going to add purchase of new asset during the year. Whatever the asset, it may be purchased during the previous year, that is 2018-19. During this year, if any new assets are purchased, which will be included or added here. So then we are going to less with the sale of any asset during the previous year. If any assets which is sold during the previous year, that is in the year 2018-19, that we are going to deduct from the above. After deducting sale of an asset during the year, that is in the previous year, next we are going to get a total that will be called as total depreciable value. Then we need to deduct or less with the depreciation which is prescribed rate mentioned in the particular problem, or we should be remembering some of the fixed rate of the particular fixed assets. Then we are going to minus one more, that is additional depreciation. This will be applicable for certain assets that we are going to discuss later. So by doing both of that, depreciation and additional depreciation, deducting from the total depreciable value, we are going to get WDV at the end of the year. That will be the last answer. If in the problem, if they ask us to find out the only depreciation, we need to follow the same format, and we need to show in the last by doing a total depreciation by adding depreciation as well as additional depreciation. And while calculating depreciation at prescribed rate, we need to remember some keynote, that is any asset including new plant and machinery acquired during the previous year and put into use for less than 180 days during the previous year, then half of the depreciation will be allowed at the prescribed rate. Which means if any fixed assets purchased, that is newly purchased in the previous year, if any assets purchased in the year 2018-19, and if it is used less than 180 days, if it is used less than 180 days, then for that particular asset we are going to calculate half of the depreciation, which is prescribed rate. And the second one is if an asset is acquired during financial year preceding the previous year but used for less than 180 days during the previous year, aforesaid restriction would not apply. Which means if a particular asset is purchased in the year 2017-18 and if that is used in the year 2018-19, which is less than 180 days, then or that time that particular restriction, that is half of the depreciation, will not apply. And the next note we need to remember for additional depreciation, for that, if a new plant and machinery is acquired and installed after 31st March 2005, additional depreciation shall be available at 20% of the actual cost of new plant and machinery if the asset is put to use for less than 180 days in the year in which it is acquired. The rate of additional depreciation will be 10%. While calculating additional depreciation, we need to remember certain points. One is that particular fixed asset should be used for production or manufacturing of any articles. For example, I can say plant and machinery. This can be used for production or manufacturing activity. Second one, if any assets used for manufacturing or production activity, for that particular asset we are going to charge the fixed rate of 20%. And if that particular fixed asset used in the previous year for less than 180 days, then we are going to charge about 10%, that is half of it. And the next point we need to remember, if any plant and machinery used outside India, we are not going to consider additional depreciation for that. And one more thing, any additional depreciation will be charged on any particular plant and machinery, it definitely should be used for manufacturing activity or production activity, which should not be used for any office purpose or residential purpose. For any other assets like furnitures, buildings or any computers, for this we are not going to charge additional depreciation because that is not directly related to production or manufacturing activity. One thing, additional depreciation can be charged for new plant and machinery purchased in the previous year, which is at the rate of 20%. If it is used less than 180 days, then it will be charged for 10%. One more point we need to remember while calculating additional depreciation, that is if an assessee sets up a business of manufacturing or production in any backward states, that is in Bihar, Andhra Pradesh, Telangana, West Bengal, then the additional depreciation available to those assessees will be 35%, not the 20%. And also it will not applicable for ships and aircrafts. Next is the rate of tax for depreciation for assessment year 2019-20. So I have given you the list of rates which is for fixed assets. So these are the rates you need to remember if they not specified the rate in the problem or illustrations. So that time we need to remember certain things. So the important one are buildings, which is 5%, you need to remember that, and furnitures, that is neon signboards, 10%, and also furniture and fittings is 10%. And then most importantly, plant and machinery is 15%, that you need to remember. And next, computer is 40%, books, which is annual as well as other books, Any other books which is carrying for lending business also 40%. Any other intangible assets is 25%. Typewriter and surgical equipments and X-ray machines are 15%. So with this, so you need to remember certain rates while calculating depreciation problems or illustration if they're not specified in the illustrations. Now we are going to solve one illustration which is related to depreciation under section 32. So here you can see the illustration which is asked in 2017 question paper for 6 marks. So let me read the illustration first. Opening written down value of plant and machinery A and B is rupees 6 lakh. Rate of depreciation is 15%. During the previous year, the following additions were made. Plant C purchased for rupees 4 lakh and put to use on 15th April 2018. Plant D, valued rupees 20 lakhs, was purchased and put to use on 1st February 2019. Plant B sold for rupees 1 lakh. Calculate the closing written down value for the particular previous year, that is 2018-19. So here we are going to calculate depreciation. So in the problem we have opening written down value of plant and machinery A and B. So here the fixed asset is plant and machinery, which is A and B for 6 lakh they have given. Depreciation they have given only one particular rate, which is 15%. So during the previous year they have made some additions nothing but purchase. They have purchased plant C for 4 lakh, as well as they have purchased plant D for 20 lakhs. They have given the date also when they have started using, and also we have a sale of one particular asset, that is plant B, which is sold in the particular previous year. So now we'll calculate with that. So I have prepared one particular format which I have showed you earlier. That way I'm going to use it and I'm going to solve the illustration. Now you can see the format here. Computation of WDV at the end of the year 31/3/2019, that is the heading. Next I have WDV at the beginning of the year, that is on 1/4/2018, which will be very common, that we are going to use. Then I have written add purchase of new asset during the previous year. Any purchase we are going to write under it. If any assets are sold, we are going to write there. If any calculations which is related to depreciation and additional depreciation we are going to do, and lastly WDV at the end of the year, that is 31/3/2019 will be there. And you can see the green color depreciation and additional depreciation that will be used for working note. So now we will start with the solution. So first I need to calculate or consider opening written down value or written down value at the beginning of the year. So I have a beginning of the year, I have a two asset. One is plant A and plant B, that is plant and machinery A and plant and machinery B I have. So that I am going to enter in the WDV of the beginning of the year, plant and machinery A and B. Which is the amount of 6 lakh. Then I need to add purchases of any new assets which is purchased especially in the year 2018-19. I need to write that. So here they have made some two additions. One is they have purchased plant C and also plant D. So let us consider first plant C purchase. So I'm writing plant C, amount of rupees 4 lakh. So next purchase is plant D, which is valued to rupees 20 lakhs. So that I need to take. So I'm entering plant D, which is the amount of 20 lakhs in the amount column. Next I need to see the sale of any assets which is done in the previous year. Here plant B sold for rupees 1 lakh. So one of the old plant, which is a plant and machinery A and B, which we have in the starting of the year. One of the particular asset, which is plant B, was sold in the previous year, that we need to take down. So plant B, so for rupees, which is sold for rupees 1 lakh. So I'm entering that. So after entering this, we need to do the total. That is for total depreciable value. Here we are not going to consider any dates or any other information, just we are going to take the amount, whatever the amount they have given in the beginning of the year, whatever the assets we have in the beginning of the year, whatever the additions or purchase made during the year, whatever the assets were sold during the previous year, that will be we are going to take. Here I have added with the amount 6 lakh, 4 lakh, 20 lakh and 1 lakh with a total of 29 lakh. Now I need to calculate with the depreciation. While calculating depreciation, it is very important to know what is the rate of depreciation. In some illustration they may give the rate of depreciation for each asset. For in some illustration they may give the rate of depreciation for all the assets as a one rate. So here I need to calculate the depreciation for each and every asset. So I'm calculating for plant and machinery A and B, that is 6 lakh into 15%. So here the single rate we have that we need to apply. So you'll get an amount of 90,000. Then I need to calculate depreciation for a newly purchased asset in the previous year. We have new purchases, that is plant C and plant D. For calculating depreciation for plant and C and plant D, we need to check the date of that particular asset. So in the problem, plant C date is 15th April 2018. So for that there is no necessity to see the whether it is used for less than 180 days or more than 180 days. Obviously it is used more than 180 days. That is the reason I'm taking 4 into 15% amount, you'll get a 60,000. For plant D, amount is 20 lakhs, which we need to take 15% rate, as well as one of the important point, when it is used. So you can see in the problem it is used on 1st February 2019. So 1st February 2019 it is started using. So from that day onwards, at the year end, previous year end, up to that date we need to take, that is on 31/3/2019. From that day to that day, if you take, it will be less than 180 days. So if it is less than 180 days, it is easy. You need to take half of the rate, so which is 50% of the rate. You can take either 7.5% or you can do it 15% and 50%. So you'll get an amount of 1,50,000. Then we have a sale also. So one particular asset as sold. So for that also we need to calculate depreciation, which is 1 lakh into 15%. There is no necessity to check whether it is used for 180 days or not for written down value of beginning year and sale. Only you need to check the day for newly purchased assets in the previous year. For that, if you check, that is enough. If it is less than 180 days, then it will be half of the depreciation rate. If it is more than 180 days, consider the depreciation rate whatever the problem in the problem they have given. So now I'm doing the total. While doing the total, I need to follow the as problem signs. So that is so I need to add 90,000, 60,000, 1,50,000, and lastly I need to minus with 15,000. That is the sale which I need to do less. So I have minused it or deducted it. So I have taken the amount, that is 2,85,000. I have written in front of depreciation. Next, I need to calculate additional depreciation. Remember one thing, while calculating additional depreciation, it will be calculated only for newly purchased assets in the previous year. We have two purchases, one is plant C and plant D. I told you additional depreciation will be applicable only for the assets which is used for production and manufacturing. So plant C and D is definitely will be used for production activity because it is plant and machinery. So here I am calculating it. Plant C 4 lakh into 20%. Remember, this asset is used more than 180 days. That is the reason I am taking 20% fixed rate as additional depreciation. Next, for plant D, I need to take amount of 20 lakh into with 20%, and remember plant D is used less than 180 days. So less than 180 days, this particular plant used in the previous year. That is the reason I need to take 50% of that rate. Either you can take directly the 10% or you can do 20% and along with that 50% of it. So you will get an amount of 2 lakh. Then we need to add both of that plant C and plant D amount, and that total that is 2,80,000, we need to write in front of additional depreciation. So after adding that, and while calculating depreciation and additional depreciation, how to find out whether it is used for less than 180 days or more than 180 days, that is most important thing. So remember, I'll always use one of the key thing or hint to find out whether it is used for less than 180 days or more than 180 days. I'll just tell you that. So here I have done the total, which is 2 lakh 29 lakh minus 2 lakh 85,000 and minus 2 lakh 80,000. I'll get a total of 23 lakh 35,000 is the WDV value at the end of the year 31/3/2019 for the previous year. If they ask you to find out what is the depreciation or total depreciation, you need to add 2 lakh 85,000 plus 2 lakh 80,000 and you need to show that is 4 lakh 85,000 is the total depreciation if they ask you in the problem or illustration. And one more thing, while finding out whether it is used for less than 180 days or more than 180 days, it is very much important because the rate half of the rate. So how to find out IL is used for less than 180 days or more than 180 days? That is, just remember we have a previous year of 2018-19 which will start from 1/4/2018 which will end on 31/3/2019. So during this period we need to remember the days, how many days which is used. So one thing I can say that we all know Gandhi Jayanti, that is 2nd October. So remember, if the asset used after Gandhi Jayanti, then it will be definitely less than 180 days, that you can see. So in the problem you can see plant D is used for 1st February 2019, which is after Gandhi Jayanti. So which is after 2nd 10 2018, then it will be definitely less than 180 days. This key hint you can remember and you can easily find out whether it is less than 180 or more than 180. For plant C, which is in April 2018, no worries on that, which will be definitely more than 180 days. But for plant D, which is used from the date of 1st February 2019, definitely it will be less than 180 days. That is the reason in both the cases of doing depreciation as well as additional depreciation, I have taken half of the rate. So now you can see one more illustration that you need to solve by yourself, and you can pause the video and you can write the question and you can answer it. And if you're having any doubts, please mention in the comment section. I'll try to clarify it. And in the coming session we are going to solve some more problems related to depreciation which is in the question paper.